Well, you give me one more time today. So by the time I'm done, that was our IT guy, sorry. Tell him we're doing okay. But so by the time we get done today, I don't know if I'm going to have much of a voice. So we thought we really needed to talk about the motor vehicle highway funds. You know, everybody really kind of enjoys talking about that, right? So honestly, in all honesty, the MVH fund has been a topic of questions, but it kind of became a bigger topic of conversation when this whole statute changed, right? When the 50% was restricted from the state distribution to only be used for construction, reconstruction, and preservation. So we're going to kind of talk about this in a little more detail, go through what some of the common questions are that have been through this year mainly. And while, you know, it might be a little bit of a refresher, we're hoping that some of these answers to these questions will help you guys move forward. And as always, if you have questions later on or need some guidance, Lori and I are always available to help. Not always, like, you know, but most of the time.
Not 24/7.
Not 24/7, right? Okay, so let's get started and let's kind of talk about the statute itself. My little thing's gone. Oh, there it is. All right, I'm not expecting you to read this. I just wanted to put it there. I'm sure it's very small. So let's revisit the statute. So Indiana Code 8-14-1-4, County Allocations, Permissible Uses of Funds Requirement. So this statute was changed in 2017. Really, this change added the word preservation, and it added a section B in which it was going to require that 50% of the funds distributed from the state would need to be for construction, reconstruction, and preservation of the county's highways beginning June 30th of 2017. Currently, the statute looks like it does on the slide that I'm presenting here, specifically B. So it changed just a little bit more, which it says, for funds distributed to a county for motor vehicle highway account, the county shall use at least 50% of the money for construction, reconstruction, and preservation of the county highways. I really wanted to start here when I was doing this presentation, because one of the most common questions we have received during this pandemic, because, you know, money's been kind of that issue, is will there be a possibility that we'll be able to collapse 1173 into 1176 and essentially make it one fund? Well, really, the answer to this question revolves around this statute. So if this statute is changed at some point in time, yeah, then there's a possibility that those could change. If the statute doesn't change, then no, that it will continue how it is currently. What I really want everyone to get from this is we didn't set the 50%, okay, requirement. It's set forth in the statute. We just helped set up the accounting for the MVH restrictive so that we can determine and verify, and so the public can determine and verify that 50% of those funds were only used for construction, reconstruction, and preservation. Remember, we are a post-audit agency, so during the audit, we're looking to see if the county is in compliance. As a reminder though, the 50% restricted is only for the state distribution. So if you're putting wheel tax, surtax, maybe refunds such as like gas sales into the MVH, these would all go into your 1176 fund, not the restricted 1173. All right, so now we've talked about the statute and the changes that were made. By the State Board of Accounts kind of need to come up with some kind of accounting guidance to help promote transparency and compliance with it. So after many discussions, the state examiner issued Directive 2018-2. This is still up on our website on the auditor's page, the top. I think it's still under Hot Topics, if I remember correctly.
No, it's not there anymore.
It's not on Hot Topics anymore?
It has regulatory, it's on Hot Topics.
Oh.
But it is with the.
It's there. It's there somewhere. Okay, so this directive came out in December of 2018 regarding the accounting for distributions from the state of motor vehicle highway account and the statutory restriction, okay, of that 50% being used for construction, reconstruction, and preservation. So really, essentially, there needed to be a way to track the MVH restricted funds separate from the unrestricted. So while reviewing accounting systems and having numerous conversations, I am told, because this is before me.
Numerous.
This is before me. I think that's you. Okay. The state examiner determined that the best course of action would be to include a sub-fund for the MVH restricted funds. So we ended up issuing a fund number for this sub-fund, which was 1173. Because the accounting systems were unable to create a sub-fund. So this sub-fund was created to track these funds separately, to see the 50% being allocated to that restricted, okay? So to see that, and then to see what's coming out of it is only going towards construction, reconstruction, and preservation. So we needed to track these from them coming in to them going out, okay? So as you know, the State Board of Accounts worked with a committee that included some highway engineers, some LTAP, how about just LTAP? To help define construction, reconstruction, and preservation, to help the local units get a better understanding of what these costs are and what can or cannot be used with restricted MVH funds. Okay, so now we've revisited the beginning. So let's take a look at the resources that are available to you. I know that you have all seen these before. In fact, if you call up and ask us questions, we will always direct you here. So on this slide, I've included the three resources that are on our website. It's just always kind of nice to have a quick link when you do these presentations, so we always like to include them. The first resource is to the actual Directive 2018-2 that we discussed earlier. The second one is the definitions and examples of the construction, reconstruction, and preservation. And the third one are some Q&As from the Directive 2018-2. So while we have been through presentations like this before, I just want to have a starting point so that we can review how it was created and why it was needed. I want to move forward and talk about some common questions that have been being asked over the past year, okay? So I went through and, through our emails and tried to figure out what questions have been the most common. MVH is actually a very, very common topic that we get. And while 2020 has had a whole range of questions this year, with it being so insane, when I really break down into the most common questions about MVH, these were the 7 most common ones. So on the next few slides, I'm going to break them down to each one of these and try to give examples to help give you guys some better understanding. And while these 7 are the most common, they are not the only questions that are out there, but because these are the questions we've answered the most, these are the ones I really kind of felt like it was a good place to start the conversation with. And again, Lori and I are available, email, phone, okay? So let's get started and talk about none other than the budget. All right, so as auditors, preparing a budget is something that you guys are intimately familiar with, all right? And just like that, with all your other funds and expense categories, you have to look at what you think you're going to need for the upcoming year and what revenues you think will be coming in to that fund and be able to help with your expenses. So for the upcoming year with MVH funds would be no different. While MVH Fund 1176 houses your unrestricted, all right, portion, MVH 1173 does house the restricted portion. But these two make up one fund. And I get that that's where some of this gets kind of confusing. So while reviewing the needs for paying for highway improvements, maintenance, salaries, and whatnot from these funds, you need to really consider the portion of those costs that are related to construction, reconstruction, and preservation. So working with your highway department will help you determine these costs that you foresee occurring within the next year. All right, so obviously questions about appropriations are very common throughout the year for every fund. Whether it's a COVID year or not, I think appropriations are always probably one of our very top, probably like top 5 maybe, that we get a lot of questions about. So we're always trying to determine which funds require appropriation approved by DLGF, or maybe an appropriation just needs to be done by the council, or maybe it's a fund that doesn't need an appropriation, such as your Recorder's Record of Perpetuation Fund. Wow, there's a lot of... So the Motor Vehicle Highway Fund, this would include 1176 and 1173. Because of its one fund, requires an appropriation to be in place for each disbursement. So we have discussed before what an appropriation is, but let's cover it one more time. An appropriation is the permission to spend. It's not the cash balance in the fund. It is not the cash that you're going to be receiving through the year. It is simply the permission to spend what you have. So you cannot spend money that 1, you don't have in a cash balance, or 2, you don't have an appropriation or permission to spend. So now while MVH is one fund, the budget still needs to be allocated between 1176 and 1173. All right. Okay. So allocating the appropriations between MVH restricted and unrestricted, as I like to call, well, I like to call it unrestricted, I guess, most of the time. It can be done a couple different ways. So I just kind of listed a couple here on the slide. I just happen to be the most common ways that I've seen it done. So when getting the MVH budget approved, some counties have actually listed the MVH restricted as a department, allocating it within that total MVH budget. And so the appropriations are allocated there. So when you go to the DLGF side of Gateway and you're looking up the budget for the year, under the single fund MVH, it would show restricted as an actual department. From there, the amounts can be entered into the software the county has as the approved appropriations moving forward. While others I've seen have determined what they think they'll need for the MVH fund and on paper have allocated it between restricted and unrestricted. So when you go into Gateway on the DLGF side, you won't be able to see a restricted portion, but once the budget is approved, it's manually entered into the software system, allocating between restricted and unrestricted. So the total budget does not exceed what was approved for MVH by DLGF. While both of these are really valid options, I'm sure there are many more ways that you can do this to allocate both to restricted and unrestricted. The important takeaway here is that the appropriations allocated to restricted and unrestricted in total cannot exceed the total that was approved by DLGF in total or really expense category. Any increase would trigger additional appropriation procedures. Okay, so lastly, things to remember. All right, so 1176, the unrestricted portion of MVH, which means that 1176 can pay for anything that 1173, the restricted portion, can pay for. It can pay for those along with other costs, including maintenance, things like snow removal. That all can be done from 1176. Transferring appropriations between 1176 and 1173. This can be done without approval as long as the total within the budgeted categories remain the same. So this means you can transfer the appropriation from supplies unrestricted to supplies restricted line because the total appropriation for supplies is not changing. However, if you wanted to transfer the appropriation from, let's say, supplies to personal services, this would require approval. Sorry. 50% of the state distributions of the motor vehicle highway funds is to be, that's not right, recorded into the restricted 1173 fund. This amount cannot be transferred out. It must remain in the fund and may only be used for construction, reconstruction, and preservation. Now that we've discussed appropriations, another common question that we get has to do with correcting entries. Mainly the question we will receive is, we have run out of appropriation in 1173, but we need to pay for these maintenance costs that do not fall under construction, reconstruction, and preservations. What do we do? The first thing Laura and I are going to ask you, are there any costs that you have that you've posted to 1176 that could have been paid from 1173? Meaning, is the county paying for construction, reconstruction, and preservation out of 1176, the unrestricted fund? This could be salaries, this could be supplies, this could be a lot of different things. But almost always, this is an astounding yes. So the next steps is, how do we get those costs out of 1176 and posted to 1173? Hopefully the next slide will help answer this. Okay, so really correcting entries should really only be occurring between 1176 and 1173 as far as, or to 1173, as far as moving the expenses go. This is because, again, 1176 is unrestricted and can pick up the same cost that 1173 can. The first thing that needs to be done is you need to determine the amount of disbursements that were for construction, reconstruction, and preservation that were paid out of your unrestricted 1176. Once that amount has been determined, the county needs to determine if there is enough appropriation in 1173 to cover the costs. And if not, then that appropriation from 1176 may need to be transferred to 1173. So, once you've determined the proper amount, you can move the expense by, again, reversing the disbursement out of 1176 and posting the disbursement to 1173. This will then reinstate the fund balance of 1176 and possibly the appropriation, unless the appropriation would need to be transferred with the disbursement. Please remember that all costs dispersed from the MVH fund, this includes 1173 and 1176, must have an appropriation or the permission to spend and a cash balance in the fund. Any correcting entry made between 1176 and 1173 needs to be documented and maintained so that there's an audit trail to follow during the audit. The audit trail should start with the original claim and be able to tie it from the original to the correcting fund or sub-fund, with notation so that it clearly identifies the reason for the correction. So this kind of leads us to our next commonly asked questions, which is overdrawn funds. Holy cow. So Overdrawn funds are funds that have obviously a negative cash balance. But no fund or sub-fund should ever have a negative balance. The only exception we make is for reimbursable grants, which we have allowed to run negative while waiting for being reimbursed, which would then zero out the fund. The MVH 1176 unrestricted and the 1173 restricted should follow the same guidance and never have a negative balance. While we understand that these distributions are coming in monthly and sometimes costs need to be paid for right now, the State Board of Accounts will not take audit exception to one of these having a negative balance during the year, as long as a combined balance is positive. But at the end of the year, they both need to be positive. Okay? I'm being so quiet.
I'm not giving you a question.
Wow. Okay. So, we've said this numerous times, but in order for you, again, to spend money, you need what two things? Cash balance and an appropriation. So, remember, the cash balance balances the amount of cash that you have in your fund, while the appropriation is the permission to spend it. So, highway funds are particularly important because a lot of projects are run through the county, and they're required to maintain their own set of records for other purposes. I apologize. But as a reminder, the auditor's records are the official record of the county. So this makes working with and communication with the highway department extremely, vitally important. Whether it's about your budgets, claims, grants, or so on, everyone really needs to be on the same page. Another thing to think of another thing to think of is that overdrawn funds is not just running that into the negative, but you're borrowing money from another fund when you do that. Even though it's not on paper, it's got to come from someplace, okay? And if you're borrowing money from another fund, that your fund can't afford it. So overdrawing a balance not only uses more cash balance than you have, but you spend way over the appropriation you were allowed. So it's really important to continue to monitor not only the cash balance and the appropriation of each of the restricted and unrestricted MVH subfunds to help make the decisions on what costs are affordable. And sometimes you just may need to wait or talk to the highway. Hey, we don't have an appropriation for this, so that you can go ahead and do additional appropriation procedures. Again, communicating. That's really the key to all of this. You've just got to communicate. Let them know. Your commissioners will need to be involved before they sign off on the claim. Your council might need to be involved that, hey, we might need an additional appropriation here. Again, everybody plays their part. Did you have a question? Oh, okay. Okay, so now we've discussed transferring an appropriation. We've discussed moving an expense a little earlier on. What about transferring cash? This is another common question we get all the time. We've especially gotten a lot here lately. So the issue here is that MVH restricted is, well, restricted. So the statute says the county shall use at least 50% of the money for construction, reconstruction, and preservation. You tired of hearing me say that yet? Once you receipt the 50% into the restricted 1173, in no event can any transfers from MVH restricted to your unrestricted MVH reduce the fiscal year distributions from the state motor vehicle highway account below that 50% requirement, okay? With the statute saying at least 50%, it did allow for the state examiner's directive to prescribe a process. In this case, the county may elect to allocate more than 50% of the distributions to the MVH restricted 1173. This would need to be done by an ordinance. During the same fiscal year, the county may transfer an amount allocated in excess of that 50% requirement from MVH restricted to MVH unrestricted. This would again need to be done by an ordinance. For an example here, if the county has an ordinance where they're going to put an additional 10% into the restricted, they got all these projects, they think they're going to need it, so they made the ordinance, 10% is going to go into restricted. At the end of the year, they realize, you know what, we really didn't need that. We put that 10% over there, it's not being used. Within the same fiscal year, they can take that 10% and that 10% only back to unrestricted, but it has to be done by the end of the year. Any amounts allocated in excess of the required 50% of distributions which remain in the MVH restricted at the end of the fiscal year must remain in MVH restricted until expended for none other than construction, reconstruction, and preservation. So with this understood, what about transfers from other funds, like edit? This was a common question this year, was basically, can we transfer edit funds over to MVH? So the number one rule with transfers, I don't know if anybody remembers, but funds should not be transferred between funds unless there is specific statutory authority to do so. Edit is particularly interesting because this question comes up all the time, and not only with MVH funds. What makes this so interesting is that back in 2014, before we had the economic development lit, we had like our CDIT. So back then, there was a statute. This has since been repealed and changed with the lit. And within this statute, it allowed transferring the edit money to general fund or any other fund of the county at any time by ordinance, as long as it would not impair the unit's ability to satisfy any debts, liabilities, and obligations for which the county economic development income taxes are pledged or otherwise encumbered. So at one point you could transfer it, but with the introduction of lit in 2016, this statute was repealed and is no longer a part of the Economic Development Permitted Expenditures Statute. Under the new statute, which was Indiana Code 6-3.6-10-2, there is no authority to make transfers out of the local income tax economic development fund. See what it's finished. All right, so I did update this slide since it's been released. It's really just the second bullet point. I had a misspelling, and I just kind of didn't like the way it was worded, so I changed it. I apologize, but it's just a minor change. All right, so edit, according to the edit statute that I just talked about, there are 11 things that can be purchased from edit. Okay. I say things, but in a roundabout way. Uses, 11 uses, there we go. So one, it could be paid, you can pay interest owed by a private developer or loan extended by a financial institution. The retirement of bonds for economic development projects. For leases or bonds entered into or issued before the date of the county economic development income tax was imposed, construction or acquisition of or remedial action with respect to a capital project for which a unit is empowered to issue general obligation bonds, retirement of bonds, payment of leased rentals, contract payments to a nonprofit corporation, whose primary purpose is to help with economic development, operating expenses of a governmental entity that plans or implements economic development projects, funding a revolving loan, for a regional venture capital fund or a local venture capital fund. And number 11, this is the one I really want to get to, is for any lawful purpose for which money in any of its other funds may be used. Okay, so that's kind of key here. The edit fund must also be used in compliance with the Capital Improvement Plan statute, which is IC 6-3.6-6-9.5 is on the screen, which means the county must have a capital improvement plan for economic development purposes. The required components are also listed in the statute, but I'm not going to go over those here. What I do want to touch on is that at least 75% of the edit money must be used for the capital improvement plan. So as long as these two statutes are complied with, edit funds would be available for use for MVH projects. Disbursements would, though, need to be posted from the edit fund. Okay? We've discussed the origin of the MVH restricted 50%, along with the accounting for these distributions, along with correcting entries and appropriation. So now let's kind of switch focus on what the restricted should be spent on. I might get out here a little bit early. They're all like, yay. Okay. So, obviously, we all know, and I'll say it just one last time, okay? One last time, that MVH restricted is for, we could say it all, everybody could say it together. Construction, reconstruction, and preservation. So, I think that is just totally ingrained in all of our heads right now. The common question here are, what costs fall into these areas? So when the statute changed, a committee chaired by LTAP was formed. This included, to my understanding, because again, before my time, was highway engineers, there were street departments, NDOT, AIM, AIC, State Board of Accounts,
Legal services.
Legal services. This big committee got together, okay? This committee took a look at all of these things, and they determined some definitions for preservation, maintenance, and administration, along with some examples. Okay, State Board of Accounts, we are not experts in these things, okay? It's why the committee came together. They helped come up with this guide for making purchases from the MVH restricted, and why we defer to it to determine compliance. So, first things first, county needs to make a determination on what qualifies, okay, for construction, reconstruction, and preservation, and document that determination. As long as it's reasonable and it is in agreement with the definitions provided, the county should be in good shape. There shouldn't be a problem there. The problem normally comes when something kind of reaches into like what we call a gray area. Again, we're not experts, but if you've got something and you are really questioning it hard, and you're trying to make it fit, you're grasping at anything you can to put it over there in restricted, chances are it's not restricted, okay? So if I was going to recommend something to you, if you really don't know and you just can't, it just doesn't fit with restricted, you're trying to force it in there, it probably needs to be paid out of 1176, okay? So just kind of use your common sense on part of that. If you look under the maintenance definitions, there are lots of examples of things that are not considered construction, reconstruction, or preservation. And we use this guide a lot when we're auditing the claims against the MVH restricted. So if costs are allocated between construction, reconstruction, and preservation, and administrative and maintenance costs, the highway department needs to have a reasonable basis for that allocation, and they need to document it and how that was determined. The same applies to payroll. There needs to be documentation where hours are worked, how they're tracked, how do they determine the allocation between 1176 and 1173. Plus, as auditors, you need to know that information for when you're doing your payroll. As a side note, we will say that the committee is looking at refining some of these definitions in the guidance. And when that's available, we will provide it to everybody. Okay. All right, so the last thing I kind of want to discuss is the reporting of the MVH funds on the annual financial report that you enter into Gateway. I know at the beginning of this year I sent out an email to everybody saying, hey, don't forget these need to be reported separately. But that kind of spurred a lot of questions when I sent that email this year. So I just kind of want to touch base. So the state examiner, Directive 2018-2, regarding the motor vehicle highway funds, clearly states MVH and MVH restricted will be shown separately on the annual financial report and the annual operational report. So while it's one fund, the county needs to show not only 1176 unrestricted, but 1173 restricted separately. Again, we understand that this can be a little confusing because the annual financial report is representing them like two separate funds. But again, it's to allow the tracking of that 50% receipted into it, okay, into the restricted, and that the amounts were clearly used for their intended purposes. This really promotes transparency, accountability for these public funds, and it gives the readers of the financial statements a better understanding. All right, so when you're in Gateway and you're entering your information, Lori kind of touched on this earlier, and we didn't even talk about it. We didn't even coordinate it. It's just kind of worked. You really need to use the standard fund, okay? Both MVH and MVH restricted are set up as standard funds in Gateway. If you have chosen to use a custom fund, it may not include all the required information, nor will allow you to go back and add the standard fund, or at least that's what we found. It may be fixed for next year. You actually had to go in and delete the custom fund to be able to find the standard fund last year. So when walking counties through this at the beginning of the year, again, we would have to delete that custom fund to be able to enter the standard. If this continues to be an issue, we will reach out to us. We'll walk you through how to fix that within Gateway. So when you're in the AFR to do your standard fund, you need to enter the local name that you use. You can enter your local fund number. You're not going to check the part that's a federal grant for number 3. Don't check that because it's not. And then 4, it allows you click on the show all funds and it will scroll down with a list of standard funds. You find it and you will select the fund that you want. And then you'll go over to number 5 and you'll hit click here to add fund. So another reason that this is important, especially with the MVH, and we kind of touched on this too, is that we also run a report that actually takes all the MVH and the MVH restricted from all the units and pulls it into a report. If you're not using this standard fund, that report's not pulling your numbers. It doesn't pull from those custom funds because it's set to pull from these funds that we have set up, these standard funds, okay? So this is a really important thing. Please use the standard fund. All right, so I just put a screenshot here of what I just kind of went through. I kind of filled it out so you could see, how it would look, and you can see that the MVH restricted is in the drop-down menu there, and then number 5 is at the side where it says click here to add this fund. So again, this slide should match up with the previous slide. We realized that a lot of this information has been kind of repeated, but these topics are frequently asked about, and we always want to give you information that you need. Again, Lori and I are just a phone call or an email away. Do we have anything before I move on to my last
We
thing?
have not had anything come
So, everybody understands that it's all clear, or they're just like, shut up, Ricky.
in. It's enough, it's too much.
Okay, what I'm gonna do is I do have a couple things before I can let you go. Stop sharing that for a moment so you can see.
Oh. Repetition is our best friend.
Aww.
Thank you.
Thanks, I love that. Okay, so this really leads us to the end of day one. It's been kind of a day. I've spoke a lot. I'm sorry, my throat's kind of all dry too. So I just kind of want to touch base on a couple things and then we will let you go for the day. First things first, we are not doing a Q&A session on Friday like we normally do. Instead, we've had you guys submit questions before. We're getting, the questions that we are getting during the conference, and if you've got anything after, maybe tomorrow you think of something and you want to ask, send it to us. As long as it's, with all of this, we're going to take them and we'll include it. We're going to issue a special bulletin. The goal is to get it out next week, so you're not waiting around because the next bulletin doesn't come out till December. So if you do have a question that you want answered on these topics, please get them to us. We'll pull them and we'll get them in there. 2, for those of you that are watching it virtually, make sure that you have a link for tomorrow, okay? Today's link will not work. If you're unable to locate it, send an email to the county's box and I'll make sure. Yeah, before 9 a.m., please, and we'll make sure to get you the link, okay? We will open this again at 8:30 in the morning so that you can come in and make sure that everything's working properly. Okay, so we'll be beginning again promptly at 9 a.m. Eastern in the morning. The WebEx, again, I just told you that, will be open. Sorry, I'm skipping things. All right, tomorrow morning, as we get started, Tara Klutz, our Auditor of State, will be there in person with Kim Diller. Because of the format and the way this is going, if you are watching virtually, you will not see their PowerPoints. So if you want to see the PowerPoint while they're speaking, you will need to get online and print those off. It's on our website under presentations and training materials, but it is available there. Just to kind of give you a heads up there. So really, we hope you guys found today informational and educational, and you enjoyed it just a little bit. We appreciate your attendance. We hope you guys have a wonderful evening. We want you to stay healthy and safe, and we will see you tomorrow.
Have a good evening.
Promptly at 9. Bye, guys.
Okay.